Hey everyone, welcome back to Land Investing Online, where we teach students how to profitably buy and sell vacant land. This is the simplest, least competitive, and most profitable sector of real estate. For more information, go to landinvestingonline.com. We have a free Discord with tons of successful investors in it. Come learn from the best. I'm Daniel Apke, joined with my brother Ron Apke and our accountant Ashish. How are you guys doing today?
Doing good.
Doing great, Dan.
Awesome. So this is going to be a really good topic today. We have an accountant here to kind of go over some basics and some things you should know before getting into the business. He's our personal accountant and he does very well for us. So I think you guys will get a lot of information out of this. But before we get started, let's go over a question from one of our members. I get a lot of properties back that need to go through probate. How do you go about this? Is what one of our members asked us. Ron, do you want to go over that?
Yeah. So, I mean, it's a common thing when you're sending bulk mail, whether it's 5,000 or 10,000 a month. It's a very common thing to get properties back where the person doesn't have the deed in their name and they need to go through probate. Sometimes, guys, these are the best deals. You want to make sure if you're going to go through the probate process with them, you want to use an attorney that you're comfortable with, and you want to kind of walk the seller through the process before you want to make sure they're committed, essentially. So whenever we do deals that need probate, you got to take into account it's going to take at least 3 months, probably closer to 6. It's going to cost more money. So you got to make sure there's enough spread in there to make a good profit along with paying those probate. So it's something you got to think about. I think it's a good avenue not to just throw them in the trash if it's a probate deal. You got to really think about it. I wouldn't do it as my first deal, but if you've done 15, 20 deals, take on some of these. It's going to expand your business and it's going to make you more money in the end run.
Yeah, really good answer. I don't even need to say anything after that, but there's tons of opportunity there. So definitely don't avoid them. If the money makes sense, I would look into them further. But let's get into the show. Ashish, welcome. If you want to start by just giving your background and what you do to the audience.
Absolutely. Hey, thanks for having me, guys. So I'm Ashish. Okay, I run a CPA firm where we are tax advisors to a lot of almost 100% real estate investors. And we are investors ourselves. We are also invest in, we don't flip lands, but we have land investments, commercial properties, single family, multifamily, and we have our own private equity branch who does that. But today's call is more about the the accounting and taxations and how to get started and set it up correctly when you begin your investing journey in the land or flipping in a business.
Awesome. So when we're talking about land specifically and what we do, how does the IRS look at our business?
So very good question, right? And this is what most of the people struggle when they begin investing in normal real estate, which land is a part of. Investing in a long-term rental is going to be very different than investing in a land. Long-term rentals and any kind of rentals, they are passive in nature and they're capital assets kind of thing. Okay, from taxation perspective, for the land, when you sell land, it's just like selling a milk at the Walmart. Walmart sells some milk, they buy the milk and they sell some milk. It's an inventory. That's what you're doing. You're actually buying a land as a milk and selling it in a very next day or in a month. It's an inventory. So when it's an inventory, they're taxed differently. The inventory is taxed differently compared to your rental properties or any other investments, stocks you got. So you have to really make sure you have a right kind of structure set up to begin with and also save taxes.
Awesome. So yeah, we're just buying and selling milk. Then we're viewing it as inventory, not capital gain. So it's a little different in that way. What were you going to say, Ron?
So just to confirm, Ashish, so just so the viewers understand, so at the end of the year, like you can't buy a bunch of land and then say, this is my expense. So when it's inventory, that land is just inventory, and then you're going to get taxed based on your profit, correct?
Exactly. And that's actually very good, right? I didn't want to get into that detail, but you're right. Let's say you spend $1 million buying land this year, but you sold none of them. You cannot go and file a return and say, I had $1 million expense this year because I bought all this land, which I'm going to sell. You only saw expense when you sell the land. So next year, if you sell $1 million again, then next year is when you're going to recognize those expenses. So it's actually one of the good tax, saving strategies when you can time the sale and if you want to recognize income this year, if your tax rate is going up next year, maybe wait. There's a lot of things we can play around whenever you do these kind of flips, but there are other things more important, such as if you're also selling land, but as you guys grow and the new investor grows, they want to keep some land. Then it has to be done very separately so that you're not dinged with the self-employment tax on the assets you want to hold. But we can get into that in detail later on.
Awesome. Really good explanation. So getting into that then, in the structure of your business, how would you recommend someone, I guess, who's just starting in land, how should they structure their business? Obviously there's different entity types and whatnot. Can you go into that a little bit?
Absolutely. And this is what I tell to most of my beginner level or even the complicated investors. Do not just go and create a bunch of entities if you really don't need it, right? And this is what I mean. That applies to long-term rentals, but for the land flipping business, if you first you need to ask yourself, okay, how much am I going to get involved in this business this year? If you're going to expect to make more than 50 grand, then just get an LLC. Do not get a corporations, do not get a C corporations or S corporation. Just get an LLC, because the LLC can always be converted into any other entities. But if you get a C corp, it's not going to help you. You cannot change back to an LLC where you're not taxed in a complicated manner, right? So if you want to make it simple, but also get a tax benefit eventually, when you realize, oh, I made $200,000, how can I save taxes? So start with an LLC. Just talk to an attorney, or getting an LLC is really quick. You can do it all yourself. Not a legal advice, but make sure you get a normal LLC and run everything through there, right? Why should not you be getting a C corporation or a normal or never convert your LLC in S corporations? There are reasons for that, and I'll make it very short and sweet. Okay, if you're gonna make more than 50 grand, then you're in a CPA or tax advisor will eventually convert your LLC to S corporation, so you can save some taxes and do some entity level tax planning at the S corporation level. And you should never get in C corporation, because eventually, if you work with a good CPA, what they're going to do is they're going to take your business income. Let's say you make $1 million from land flipping. They're going to take a lot of other tax planning opportunity and offset your income from land flipping business. If you get a C corp, that's never going to happen. Okay, C corp pays its own tax. You cannot offset it with any other planning at the other long-term rentals. So all that to say is, you should really be careful if you're going to buy get a C corp, unless you want to sell your business in the next 5 years. Do not get an S corporation right away. Get an LLC when you start out. And if it's profitable, if it's a cost benefit analysis, we do cost benefit analysis. And if it makes sense to file an S corporation, we can elect S corporation at the end of the year. Okay, we can elect S corporation in the next 3 years if it's really that late. But so don't get S corporation right away, if that makes sense.
And then another question we get a lot is if someone's starting and they say they never owned a business before and they want to start land flipping on the side, and they're sending out a little bit of mail, maybe getting a deal here or a deal there, maybe 1 or 2 a month. Should they get an LLC before even starting, or are they able to just do it under their own name at first?
At first, do it under your own name, because LLC without crossing that 50K mark is not going to save you any tax anyway. That's why I was telling you earlier. If you really want to say, I'm going to go this, full-time in this, I'm going to make at least 50 grand, then getting an LLC will eventually help you save self-employment tax with S corporation later on. But if you're going to, this is November, and you know that you're not going to make 50 grand, then you don't even need an LLC. Just, do it under your personal name. It's going to be filed as a sole proprietor. You're not getting any more deductions because you have an LLC. Okay, you're not getting any more deductions because you just get that legal entity. You get same deductions. LLC is only going to help you, especially in the flip, when you wholesale land or flip land, is once you hit that 50K mark, we can elect to be an S corporation. It's going to save you taxes, but you need to come up with your own narrative and a goal saying, am I going to do this? But if there's a remote chance that you're going to make 50 grand, then get an LLC. It's so cheap. It's $100 to get one, right? It doesn't even have to be done perfectly when you start. You can always change the LLCs, always then draft a new agreement. So just get an LLC and just run everything through that, and you'll be fine.
Awesome. So to sum that up, then just get an LLC when in doubt. Don't get a C corp. And then if you make a lot of money at the end of the year, you can always convert it to an S corp and do what do they call it? Late filing.
Yeah, you can do late filing. Yeah.
Late filing. Yep, exactly. Great. So what are some basic ways to alleviate taxes that you and your firm do? And what are some common mistakes new investors you typically see?
You know what? I'll tell you one common mistakes, and this is going to happen to every one of them, who does this. And I have bunch of, land flippers I do actually. And when they start out, this is what they did. You guys make good money. Okay. You'll make good money. I mean, with the like Apke brothers here, they can teach you everything. And this new investor is going to make a lot of money. When they do, now they need to park their money, right? And what they do is they'll go buy rental, and which makes sense, but they will buy that under their own corporation that they just created to flip lands. That's a big no. Okay, it takes a lot. I mean, I had a call with a client who did exactly the same thing. She had to pay $300,000 extra tax because she did this. $300,000, and not even kidding. So, but it's the solution is very simple. Right? Do not make these mistakes. You run your flipping business to S corporations and everything. You flip land there. If you want to flip a property, you can flip it in the same S corporation too. But if you're going to buy and hold some kind of rentals, never put this in this LLC or your corporation, right? Create another one or hold it personally, but not in this LLC. That's one of the biggest mistakes I see with land flippers, because they already got an entity where they say, okay, it's easy. I'm just going to run everything through here. Money sits in this account, so I'm going to pay down payment from here, and they get screwed up because having and it doesn't give them any tax benefit. Rentals in general gives you very tax benefit if you do it correctly, but if you put in S corporations, it basically negates all the tax benefit. That's the first mistake. And I think this ties into what I was going to say, how you save taxes. This is very simple, guys. You're going to make money. So land flipping is not like rental property where you're going to have a paper loss from depreciation. You cannot depreciate your land when you sell them, or your land can never depreciate anyway. So you're going to make a lot of money here. Let's say you make $1 million from your land flipping business on this side. Okay. The biggest tax planning, I'm not going to go into details saying, oh, you can deduct this and deduct that. They're going to make a very little dent on this, high net worth and high earners from land business. But even you make like 100 grand, your goals would be, how can you now get invested in the real estate business in other ways, such as, long-term rentals, syndications, commercial properties, whatever it is. Take these two and offset each other. That's the biggest tax savings you're going to ever get. There's nothing else, unless you want to do some complicated, transaction, captive insurance, and other easements, which are, might not even be applicable to you. That's a whole different story. But at the very basic level, even the beginner investors can do two tax planning. First is at the entity level tax planning. When you get an S corporations, there's a lot of tax planning that can happen at the entity level, which you need to work with your CPA to do that, right? The second planning, the biggest that's going to make a dent, is real estate again. Any other kind of real estate, not the flipping kind, not the wholesaling kind. Okay, long-term, short-term rental real estate, apartments, commercial properties. You're going to buy them. You being a full-time real estate investor or by flipping land, you can basically buy a bunch of long-term wealth building real estate and offset your business income that you're going to make from your land flipping. That's the biggest way you can save money. And I have clients who pay zero taxes because of this. Zero taxes, makes $1 million here and have a lot of other investments, offset each other, and pay zero taxes, take home money, and invest in other stuff.
Nice. That's
awesome. So what you're referring to then is called bonus depreciation, correct?
A part of it, right? Because bonus depreciation, you have to understand, is not, it happens to be 100% right now. It's going to 80% next year. It's going to, again, going down 50%. It was always 50% before, but there are other things you can do with real estate, right? You're right. The biggest tax benefit is going to come from, you're going to get a $1 million from your land flipping business, and you're going to buy a really nice, let's say $2 million, a warehouse, or flex warehouse, or I don't know, storage units, or whatever you want to invest in, or RV parks, mobile home parks, in any kind of real estate that makes sense from numbers perspective. And then if you want to offset the income the first year, then we're going to do cost segregation, make sure there's no limitation on cost segregations because of various other regions, and then offset each other. You guys being a full, if you are, your spouse is doing a full-time real estate and flipping a business, and he's already doing a full-time real estate, then there probably not going to be that much limitations. You just need to do it correctly and have a good resource so that, yes, it offsets each other with cost segregation.
Yeah, just make sure, obviously, you're following the guidelines on what makes a full-time investor, because I'm sure a lot of our students have W-2 9-to-5 jobs and, as accountants and stuff, and a lot of times they won't qualify.
Exactly. You got to be very careful with how you invest in other, and even if you do land flipping, you need to be careful how you invest other assets. There are certain kind of assets like short-term rentals where you don't have to be full-time real estate to get the same benefit as a long-term rental. Again, you have to work with your CPA to get into detail and help you plan for this.
Awesome. So, well, some really good takeaways there, Ashish. Where can people find you?
Oh, people can just Google investor friendly CPA or do investorfriendlycpa.com and just go there. If you want to, I'm very generous with my time, guys. You guys know, if they just email me, I'll help them out. Just email me if you have any questions. Even like this is my offering to you, all you new investors, so whoever listens to this. Okay, you don't have to work with me, guys. Just email me with the questions if you have. When you're starting out, I'll help you out. Like, I was an investor, beginner investor in myself, and no one helped me, and it always bothered me. I did something wrong. I don't want you guys to do the things wrong when I'm offering helps to you guys. So just make sure you reach out to me and I'll help out. www.investorfriendlycpa.com. Very easy to find us.
Awesome. Investorfriendlycpa.com. Tell them Land Investing Online or Daniel Epke sent you, and he'll get you guys squared away. Any questions you have, go there. He's super helpful. He spends a lot of time with us. So definitely recommend it on our end. Other than that, guys, thanks for joining. Don't forget to visit landinvestingonline.com, join our free Discord. When you join in there, say hi to Ron and I. Other than that, thanks for coming, Ashish.
Absolutely. Thank you, guys.
Take care.